Welcome back to my channel, and if you are new here, kindly subscribe, hit the notification button. Now in this episode I will be talking about the hidden engulfing. We've been talking about engulfing and how we can navigate through the market trading using the engulfing, the concept of engulfing theory or the concept of engulfing. So we've talked about, I've discussed here on this channel engulfing itself, how candle, how engulfing works, and I've also discussed what happens if engulfing got failed. If the engulfing zone got broken, what happened thereafter. So now I'm going to be discussing about hidden engulfing. Yes, time behind what we call fair value gap, FVG, fair value gap. Like for this candle now, let me mark this place where we have fair value gaps. Yeah, let me mark it here, fair value gap. You can see fair value gap is usually formed between three candles. This is first candle, second candle, and third candle. You can see out of this space, the wick of this first candle get to this place, the shadow of the second candle or the wick go to this, but in between this space, that is only where we have the part of this candle that is not interfere by the price, the action of this other candle and this other candle. Now, sometimes, and that is why that most of the time we say, okay, when we trade to fair value gap or price get to the fair value gap and price start reversing, or the price couldn't, the wick just touch the zone and it keep going the other direction. The reason that happen most of the time is because in within that fair value gap, there is hidden engulfing that is not seen, that you cannot see in this larger view. This is H4 that you are not seeing on this high time frame. So for you to see that, you need to go to lower time frame. Okay, let's keep going. So let's go to 1 hour time frame and let's see for ourselves if we see anything. Yes, we cannot, within this space now, we are not seeing anything, right? Okay, but one other thing I'm seeing here is that I'm seeing the intercepts between two candles. So let me mark that particular spot. Let me mark it this way. Okay, can you see it? Okay, now let's keep digging. Yes. So on getting to this, yes, we are now on 30 minutes. What do you see? You can now see. So we see what? An engulfing buy. So an engulfing buy. So let's now match it. Yeah, engulfing buy. Yes. So what can you see? You can see this was what was responsible for the price to discontinue from going down and start going up. Can you see that? Yes. So most of the time on all the fair value gap that you see, oh, price just starts going the other way around. So let's also check. Let's also check. Yeah, this here is another fair value gap. Here's another fair value gap. So because you see, what do you see? You see that when price came back to this particular spot, what happens? Price start falling. Yes. So what happened? What is hidden here that makes the price to go down? If we are viewing it from the one, and that is why this is why multi-time frame analysis is very, very important. If you just rely on one time frame, of course, it also depends on your trading style. But if you are a beginner or you are intermediate trader, you are just start trading, your trading career maybe between 1 year, 2 years, and you are not making any progress. See, let me tell you something. You need to embrace multi-time frame analysis. That is where the magic is. Don't get stuck to one time frame. You have to analyze. Okay, here what you see, we see a fair value gap here. But let's check other time frame and see what exactly happens there that make price. Okay, what can you see? Here we saw also that there is what? There is a gap here. There's a gap here. There is a gap. You see two candle, the gap between two candle. So let's also dig further. Yes, let's dig further. So we still see the same thing here, but let's dig further. Yeah, the same thing we see in this same place. Let's dig further also. Okay, yes. So what do you see? Yeah, here we see an engulfing cell. You can see that clearly. And here also we saw another engulfing cell. Now, so let's try to match it. Let's go on higher time frame to match it so that won't take much of our time. So let's match it. Let's match it. Okay. So you can now see now that this was exactly, it was the presence of an engulfing cell that was present within this fair value gap that was not obvious. Yes, the fair value gap is here, it's obvious here, but what actually happened on the lower time frame is that within this place we have engulfing cell. So when price get to this place, what happened? Price starts selling. So most of the time price will not reverse except there's a presence of what? Engulfing. So that is to tell you how important engulfing is. So from here, you see, from looking at the fair value gap, inside the fair value gap, we see that we have what? Gap level. We have two candles that intersect. In between them, we have that. So if you decide to leave that, we also see hidden engulfing is also present. Yes, let's just look at this. Let's look at this. Yeah, let's just mark this in this gap level between these two candles. Then let's go to other time frame. Yes, what do you see here? We see an engulfing buy. Can you see it? This was an engulfing buy. So this is hidden engulfing. So what happened when price came into this place? Price reacted here and start going up. So that is H4. Okay, let's go to, okay, let's check daily time frame too, because this happens everywhere. Price is fractal. So whatever happens in each time frame, okay, let's look at this particular one also. Let's look at this gap level. Yes, let's look at this gap and let's see what is happening. Okay, in that gap level, what do you see? Yes, I said it. So we are seeing another engulfing cell. So what happened when price got to this place? Price starts dropping. You can see price start dropping. But here, what you saw here is just an opening, just a gap level. That is to tell you how important the concept of engulfing is. So most of the time in your fair value gap, when you see price reversing, and most importantly, if you want to know the spot where price is likely to reverse, even within the engulfing, even within the fair value gap, you need to do multi-time frame analysis. Marking that particular spot, moving to lower time frame to see where you can spot all of this. Of course, you might have a strategy that is working perfectly for you. Then just the knowledge from this can bring about improvement in your trading. Yeah. So it's so powerful. So with that, so don't start viewing each time you see fair value gap, you have to check what exactly is hidden there. And for you to do that, you just go to lower time frame, keep going that way until you spot that particular gem. And you anticipate that price, whatever price does within that spot will now determine what your response would be. Because for you to be a good trader, you must not just be someone who predicts the market. Your job is to react. Yes. Let me say that again. You are not to predict. Your job is to react. What does price, or what is price doing at a particular spot? What price is doing in that place, that is what will determine what your response will be. As a matter of fact, the common language of the market is rejection. When price get to a particular place and is rejecting, so that is to tell you that something is actually, you need to pay close attention to what is happening there. Price may want to go the other way around. That is going to be all for now. If you really got a value from this video, kindly subscribe, comment, and share the video. Thank you.